What's up everybody, I'm Jaspreet Singh, and it feels like almost every day now that a new executive or an economist or a bank comes out and says that we are going to see a recession or an economic slowdown in the near future, and some people are saying that it's already here. But now the World Bank has taken it one step further. The World Bank is the institution that lends money to a bunch of developing countries around the world, and they say not only do they expect an economic slowdown and a potential recession, but they're also talking about the risks of stagflation increasing right now. I've been talking about the risks of stagflation for a little while now, and stagflation is where you have the economy slowing while inflation is still high. So the cost of living is growing while your wages are going down. The reason why this is so significant is because up until now, the whole idea and even the word stagflation has been so disregarded and just completely brushed off by the government and the Federal Reserve Bank, saying that it's not even possible. Remember, this is the same Fed that said inflation was transitory up until December of 2021, and this is the same government that said that money printing does not cause inflation until June of 2022. See, what's happening is a lot of people are starting to see these storm clouds form in the economy. Like, you have a lot of the major retailers talking about how their profits are getting hurt and how their future sales are gonna drop and how they're worried about inflation and the sales of their products. See, that's not good news for the economy, while at the same time, we also have inflation, which is still very, very high. This is where everybody asks, what do these factors mean? And the answer is, I don't know. And when you say, I don't know, that creates uncertainty. And the one thing that investors hate more than anything else is uncertainty. That's why we've been seeing the stock market get hit so hard. That's why we've been seeing the cryptocurrency market get hit so hard. I mean, the real estate market is still doing hot, but now we are starting to see signs of a real estate market cool down. Stocks and crypto work kind of similarly in the sense that both of them are very liquid. So when you see panic or fear, they can drop very quickly, versus the real estate market is not very liquid. And so it takes a much longer time for real estate prices to adjust. I mean, just for an example, when the 2008 crash happened, stock prices bottomed in the early part of 2009, versus real estate prices didn't bottom until 2012, about 3 years later. And the reason why is because it takes so much longer for the effects to hit the housing market. It hits the stock market and the crypto market first, and then the real estate market is a lagging asset. The question though is, are these uncertainties valid? Like, should people actually be worried? The answer is going to depend on how much the inflation that we're seeing right now is caused by money printing and how much is caused by inventory and supply chain problems. And then it's going to depend on what the Fed does in response to what the actual cause of inflation is. However, cryptocurrency is a little bit of an exception there, because in addition to all of that, cryptocurrency is also going through a weird regulation change. There's a lot of new proposals out there on how cryptocurrency should be regulated, which will change the way that cryptocurrency works. And for the first time, we're also seeing some big banking executives like Jamie Dimon openly talk about Bitcoin. Now, as a little reminder, if you take a step back, Jamie Dimon a few years ago talked about how anybody who buys Bitcoin is stupid and that you're going to pay the price. Now, Jamie Dimon is saying that, well, Bitcoin is actually undervalued and it's a good investment. The one thing that I want to mention if you are investing your money in crypto is that it is going to be volatile, it is speculative, and so you have to be willing to withstand this volatility if you want to be an investor and a long-term investor in cryptocurrency. Now, if you are looking for a brokerage to help you trade cryptocurrency and even stocks, you can check out our sponsor FTX US, because they make it super simple, not only for you to buy and sell crypto, but for you to dollar cost average your cryptocurrency. I invest my money into a few different cryptocurrencies, Bitcoin, Ethereum, and a couple of the smaller coins. But the way that I do it is I buy a little bit of these cryptocurrencies every single day. So to me, it doesn't matter if the market's up or down. I'm just buying more of these cryptocurrencies and the blockchains that I believe in, and I'm just going to keep doing that for the long term, whether the market's up or down. And FTX US makes it super simple, because now you go onto the app, you can enter in which crypto you want to buy, and then you can pick the frequency. You want to buy it once a month? You want to buy it just one time? You want to buy it once every 2 weeks? Or do you want to buy it every day? You can pick the frequency and it does it automatically for you. The nice thing about FTX is that their fees are so much lower than pretty much every other major brokerage out there. So more of your money can be used to buy the assets and crypto that you want, instead of just making your brokerage richer. And right now in the app, you can trade crypto and NFTs, and they're also going to be launching a feature which will allow you to trade stocks right off of their app. And the best part of all is that if you use my link down in the description below, and then you enter in the referral code code minority, you will have the chance to win up to $100 worth of crypto. And then anytime you trade more than $10 worth of crypto, they will also give you a free coin. So if you want to learn more and start trading or investing on FTX US, I'll put the link to how you can do that down in the description below. So if we dive into this question now of what is causing all this inflation that we're seeing right now, because a big reason why our economy is slowing down, the reason why companies' profits are going down is because the cost for products is so high. So this high inflation is causing an economic slowdown. So the question is, what's causing the inflation? And you have two sides. On this left side, I'll put supply chain, which will be inventory issues because manufacturers can't produce products, you have shutdowns and whatnot. The other side is money printing. So pretty much up until not that long ago, in 2022, everybody in the Fed and the government and pretty much every other major executive said that the inflation that we're seeing is only because of supply chain issues. The money printing that we did in 2020 and 2021, how could that cause inflation? Even the Treasury Secretary Janet Yellen said that in 2021 that there's no inflation worries. Not only are they not worried about inflation, but the new $1.9 trillion stimulus bill would not cause more inflation. And then on June 1st, 2022, about a year and a half later, she admitted that the money printing did cause inflation. Now, still to today, the Fed and many people in the government believe that, okay, there is some money printing that's causing inflation. However, the main root inflation that we're seeing, the root of the higher prices is the supply chain. And what's been happening now in the private sector, so not in the government, not in the Fed, what's been happening with some of these executives like I've been talking about is many executives, first you had JP Morgan Chase Bank, you had Deutsche Bank, you had Bank of America, you had a bunch of different institutions, even Morgan Stanley just came out recently saying the same thing, that they're realizing that the supply chain issues, the supply chain, the inventory, that's a part of it. But they're saying that more and more this money printing is a bigger cause of the inflation. Now, what does that mean? Because depending on what's causing the inflation, that's going to change how you react and fight it. Because if it's just supply chain issues and an inventory problem, well, that's a matter of infrastructure and time, right? You got to let the bottlenecks ease. You got to just get through this painful time. Let the ports open back up. Let factories open back up. Let more people go back to work, not just in the United States, but in China and other countries as well. And once you do that, then everything will just clear and then the price of things will drop. And even if they don't drop, which is pretty unlikely in that sense, because if a company can sell a marker for $10 and keep doing it, then they're going to be less likely to bring the price of this marker down until a new marker company comes in and then they can sell a marker for a cheaper price. So that's one of the issues with the supply chain. However, the idea here is once things ease, that the supply chain issues will get better and the prices of things will stabilize. And so there's not much that the Fed can really do in that sense. I mean, you can invest in infrastructure, but private companies really have to make that investment themselves. But if the issue, the root cause is money printing, where low interest rates, quantitative easing, and stimulus for people, for businesses, for corporations, for the markets, if that is the root cause of inflation, and that's the reason why the cost of living is going up, well, then that's going to be much more painful to fight. And that's the reason why now the Fed is taking some action on inflation. They are working to raise interest rates. However, they're not getting super aggressive yet. Yes, we are seeing interest rates grow rather quickly, but they could be doing it a lot quicker, and they're not doing that yet because there's still hope and believe that this supply chain and the inventory issues are a big factor in the inflation that we're seeing right now. Now, I do feel a little bit bad saying that it's inflation because the word inflation, by definition, means you are inflating the monetary supply, right? You're increasing the amount of money, you're printing money. So just know that when I say this word inflation, I'm not talking about the actual definition of inflation. I'm talking about the prices of things up, more expensive now. The concern now in those storm clouds that I was talking about, and the same thing that the World Bank said, is what happens now if inflation is causing a slowdown in the economy. And this inflation is caused more than the supply chain issues, but more because of this money printing, then what? Because if we have this causing inflation, the price of things to go up, well, then this could also be leading to an economic slowdown, essentially a recession. So if you have a recession with inflation, that's how you lead to stagflation, because stagflation is when you have an economy that's slowing. So you have jobs that are being lost and you have companies that are struggling, keeping up, making profits, while at the same time you have a high cost of living, because now the prices of everything is so high, and that happens now because the valuation of your currency is being devalued while the economy is also struggling. This is a very tough situation, and the last time that we saw this sort of stagflation was in the 1970s. And back then, when we had all this stagflation because of all the money printing we did in the early 1970s, that was when we took the dollar off of the gold standard. So our money became fiat currency, because before 1971, we couldn't just print money at free will. We needed more physical gold to print money. And so you had to actually produce wealth, in this case gold, in order to produce money, dollars. But then after 1971, President Richard Nixon took the dollar off of the gold standard because the United States was dealing with a lot of issues. We were spending way more money than we were bringing in, kind of like what we're doing now. And in order to prevent a default, he took the dollar off of the gold standard, and he said essentially that you cannot convert your dollar for gold. And then they started printing dollars on command. They started printing an insane amount of money to start paying off of their debts. And the issue was, well, that these new dollars were not backed by physical gold. They were just currency. It was just pieces of paper. That created a lot of inflation, and it entered a period of stagflation, where now you had all this inflation and an economic slowdown. And that was when the Federal Reserve Bank in the early 1980s, they had to jack up interest rates to near 20%. If you wanted to buy a home, you were paying 18, 19% a year on your mortgage. So now here we are today, trying to figure out where we are. Now remember, the Fed and the government are reactionary. They're not going to try to be proactive and try to guess this, because if they do that, they could cause a recession. Because if the Fed now is aggressively tightening monetary policies, if the Fed is aggressively raising interest rates, that's pulling money out of the economy, and it can cause a stock market crash, it can cause a real estate crash, it can cause a cryptocurrency crash, and that could cause an economic crash. And the Fed doesn't want to do that, because, well, they hope that this is what's causing the inflation. And so this is the debate that now everybody's having, and more what's been happening is more people are falling here, saying, oh no, this money printing might actually have caused inflation, and it might actually be causing a little bit more inflation than we anticipated. But still, there's some hope that once the supply chain issues get better, that the inventory problems will get fixed, and that could cause a relief in price pressure, which could cause a reduction in inflation, which could help the economy grow again. Now, of course, I don't have a crystal ball. I don't know what's going to happen in the future, but this is the thing that you want to pay attention to. And what we're seeing is more and more people are starting to say this is what's more likely, that this is what's causing the inflation. And if this is true, the Fed is going to have to get more aggressive to fight the inflation, which could hurt the economy even more. So these are the things that you want to pay attention to, and why you want to be financially educated now more than ever, that way not only you can stay up to date on what's happening, but so you can make smarter decisions with your money. If you enjoyed this video and you're looking for an easy way to stay up to date on what's happening in the top finance and business news, you can check out Market Briefs. It's a completely free financial newsletter that I created, where my team breaks down what's happening in the finance and business news into a fun, ready to read, and easy to read email. You can read it in less than 5 minutes every morning. It's completely free, so if you want to join Market Briefs, you just got to click that button right over there. Thank you for watching, and as always, keep hustling.